Okay, the record button is on. We actually missed the first trade, which was the not missed it, but the dollar CAD, I think it was. Yeah, right there, a half lot trade, and manually exited at about 11 pips, I think it was. And we're in a euro dollar short at the moment, and primarily because if we look at the euro dollar on the 1 hour chart, we've got a twin tower here. Let me open this up so we can make it, or at least what I call a twin tower anyway. There. And whenever we see this formation, the odds are very, very high that the next candle will go in that direction.
Yeah,
We see here's a twin tower here,
yeah,
and the next 1 hour candle went in our direction. Here's a twin tower here. Well, this should be a red candle, but the next candle went in our direction. Here's a twin tower long, and the next candle went in our direction. So that's kind of what we're looking at here with this euro dollar.
yeah. Divergence there as well, Lou.
Um, yeah,
Well,
from here out.
I wasn't looking that far over. I was looking closer than that, but yeah.
Yeah, yeah. You were saying probably right in here, maybe.
Well, no, further right, further to your right, there.
Uh,
Where the candle does it, right there.
okay. Well, this candle. Yeah, oh, yeah, right. No, this is done already. Yeah.
Yeah,
So now keep in mind, when you're in a down market, the first thing a candle does is it makes the upper wick. So that's the first order of business for this 9 o'clock candle is to make the upper wick. When the upper wick is done, then prices should come back down and we should get a red candle here. So we may be in this for a little bit.
yeah.
And just realizing this stop is probably a little tight, for based on a 1 hour wick. Um, but I don't like moving stops back. I just don't want to get in that habit. I'd rather take the loss than do the bad habit. So I'm going to leave my stop right there, fully understanding that this candle is going to make that's going to be a 1 hour upper wick, and then price will come back. But if this does stop the trade out, we can certainly get it back. So I'm not concerned with that. So let's take a look at New Zealand dollar. Let's scan here a bit. New Zealand dollar looks like it really wants to fly also. Let's squeeze this in a little bit. And that was our trade entry there. Um, that doesn't look bad either, actually. New Zealand is at 6, and the dollar is at 5 and change. Let's say we got a 2 pip spread. Let's take that. Oh, I almost did that again. All right. And I think pound dollar also was one that had a twin tower. And let's go out to the 1 hour. And as you can see, it's making that upper wick. Oh, gee, did I take this trade the wrong way? Um, Euro dollar. Oh, Jesus. Why did I didn't have an arrow. I shouldn't have took this trade. And we go down to the 1 minute. Maybe there was one down there. Well, the trade may work out, but it wasn't by the rule. Oh,
Yeah, I thought you took it on that 1 minute arrow. I've noticed that the New Zealand dollar has been going opposite of what the dollar wants because New Zealand's so strong, actually.
mm.
Well, New Zealand dollar's had a bit of a fillet from some sort of dairy thing, hasn't it?
Oh, yeah, that whole milk thing.
Yeah,
Let's take a look at New Zealand dollar again. Nah, I like the entry. The entry was where it was supposed to be, but I just want to go back to this euro dollar. Oh, I may have taken this euro dollar sell. Oh, I took it up here or in here. I'm thinking this should be about 3 pips. No, we go to the 5 minute. I don't like looking at a chart and then I can't figure out why I took a trade. That's always a mistake. All right, the New Zealand dollar I understand completely. The euro dollar I don't. I can't place my mind on why I pulled this. I know why I should pull it, but that doesn't look like it's what I did here, unless I took the trade over here somewhere. It was less than 5 pips away when you combine the movement and the spread
I think you took it on the second red candle after the signal.
right here.
The red candle before that one.
Here.
Yeah, so maybe that's like two
Yeah.
and a half pips to there. Yeah,
Okay. Yeah, that could be it. That's about 3 pips. Yeah,
yeah.
that could
There
very
was a
well be
twin
it.
tower on the 15. I don't know whether you did it off of that, did you, or didn't you look at the 15?
Well, uh, my entries have to be based on this 5-5,
Yeah.
even though
No,
I know that.
I mean off the 15-minute chart, Lou.
Well, we never looked at a 15.
Oh, we didn't look at a 15. Okay,
No.
because there was a twin tower on the 15 minutes. So,
Yeah, well, there is the twin
yeah,
tower there, and this
yeah,
would be an
yeah,
entry.
yeah.
But I never looked at a 15. Had I looked
Oh,
at a
right. I wasn't
15,
sure which time frames you looked at.
yeah. Well, we've got these two trades. We'll let them cook here for a minute. But again, like I said, I don't want to move my stop on this euro. I'd rather have the trade stop out than do the bad habit, because that's crucial. Because your habits will definitely make you or break you in this. Okay, so New Zealand and the dollar are a little closer together, but it's still essentially long, and we still have some room to the top. That just could be a very slow trade. And euro dollar, let's move that up to the top of the list. And euro dollar, I'm still expecting short, but like I said, if we look at this 1 hour candle, it's got to make that top wick, and then it should come back down and follow through and give us. Well, we would like for it to come back down and follow through. I think it just stopped, right? New Zealand dollar, yeah. So the euro dollar stopped. So, and again, I wasn't going to move my stop farther back and give it room to breathe and all that nonsense. Um, so we can wait for a euro dollar signal now and do it the right way. All right. And that's, remember, I was saying I would like to see a blue arrow and then a yellow one coming back. So we may get that yet on this trade. And where are we on New Zealand dollar? Um, okay, and I don't have a stop or take profit in here yet either. So let's bring this up. That's 5. Bring it right up here, just above that, and I can check it later. And bring my stop down to this little shelf here. That's about 13. 2 pip spread. That's pretty decent. All right. So now that's in. I won't worry about that so much. Let me go back to the blank chart. And this is euro yen is another one that should give us a short leg back. So let me move that up. And now what I'll do is with the euro yen and euro dollar, I'll look for the best looking of the two charts, and that'll be the one I take the trade on, whichever one looks the best, since they're both going to move in the same direction anyway. Let's take a look at euro yen. Euro yen. All right, well, euro yen's got a whole price trap thing going on here. Looks like it could be like a 30-minute. It kind of looks like this green candle here. Not quite, but you see it's, definitely sideways. Same thing. That looks like the price trap candle there. This is euro yen, so let's go back down to a 5. It looks like it wants to go in our direction. There's our arrow. And if we get back down to this price, I'd be willing to take a shot at it. Let me mark it. All right. And we know we've got energy from the higher time frame creating this, so we'll see what happens. Let's go down to a 1 minute. Okay, same basic thing on a 1 minute. Euro yen, there it is. That's my baby. Now I just need that to close, and we're off to the races. And it could give us a decent push down, but it's got to close the right way. You can move this down. We don't need that at the moment. There's no significant divergences here. And let's see, New Zealand dollar looks like it's trying to cooperate with us. This is Euro yen. Yeah, okay. New Zealand dollar still slowly making its way up, so we'll just hold that. And let's go back to Euro yen. Our indicator came back. You see how long a minute is now? Some people were saying the 1 minute chart was too fast. Where's that same candle we're in? So, believe me, depending on the system, the 1 minute chart is not too fast to trade. Hey, hey. Well, it's at least below this level, which is what I was looking for. And it's the first significant drop after this pullback. But I'm waiting for there we go. Thank you very much. I could have waited and let this candle make the top, but all right, we'll close that. All right, so this is a proper entry now. And we pull this down here. This might be a protected level here, this 00 again. I'll come down here a little bit below it. I'll go to straight 10 pips. And where do I want to put my stop? Up here, that's 14, that double top. That's a little much for me. I'll put it here for now. I can always move it closer. Closer I'll move, farther back I won't. I just want to see what that looks like on a 5-minute chart. Yeah, stop loss is up here, so actually this shelf right here would be better for the stops. Let me put this right here. All right. And we've got the New Zealand dollar starting to creep. Euro yen is starting to work. So this is just slow and steady now. Let things unfold. Let's look at the New Zealand dollar. That's starting to move up. All right, that's a good sign. Euro dollar. Oh, no, Euro yen is the one we're in. All right. Everybody understand why I won't move. It's my personal preference. I never, ever, ever move a stop backwards once I place it. That's just my own personal thing. I hear popcorn back there. I hope you guys are picking up those 2s and 3s.
You knew it was all the time, didn't you, Luke?
I wasn't going to say anything. All right, so we should unfold pretty good considering, what's going on with the news. And again, you see, I tried to look for the best looking chart. It's that fashion show that I talk about. you know, and all the pips, they walk around in their bikini and parade, and you get to pick the one you like the most.
And talk like that, Lou, you'll get Daryl excited.
Yeah, don't mean to disrupt him. I didn't get a chance to fix that video, Daryl, so I may have to ask you to do it. Let me get my close order here. Because if this gives me 10, I'll get out. Normally, I would just let it run right down to the take profit, but, you know, because we're working with a time constraint here. Oh, no, it's still early yet.
Um, what did you say about a video, Lou?
Remember we talked about making a small change in one of the videos? I just have to look at this New Zealand dollar trade here. Hang on.
Oh, yeah.
I didn't get a chance to do it.
Did you post the video?
No. I told you I wouldn't until I had a chance. There we go. So we got 10 on that.
Yeah, as
And
legal counsel, I would advise strongly against that.
strongly against taking the 10 pips. No, that hit the stop. I mean to take profit.
No. As legal counsel, I would
Oh, I got
strongly
you.
advise against publishing the video.
Understood.
Yeah.
All right, so let's see if we get 10 on this. Come on. Don't fuck with me today.
Your magic 5,000 just hit there again.
Oh, it did. I didn't even see it.
Yeah.
All right. Now let's get my close order ready. And oh, come on. All right, I'll just back off and watch the paint dry. Oh, it's got to give me 3 pips. That's why. Ah, now I understand what I'm looking at. I took a quick glance down here. I see what you mean by the 5,000. I didn't
Mm.
pick up on that when you said it initially. Okay, it's just boy, this thing is just going to just be like that girl in high school.
Are you talking about blue orbs?
Something like that. Yes.
Calm down, Daryl.
All right. So we hit our goal now. So we're back to our 5,000. So now what I want to try to do is to build on that, and that's good because this candle should make an upper wick of some kind, unless the news is really pushing it. But it didn't. But it goes back to show you on the 1 hour. Let's go back to the 1 hour now, and we'll see that twin tower has played out. If you remember, we didn't have much of a candle here, and we mentioned that oh, that was euro dollar, where the 1 hour candle, its first job is to make the upper wick,
Yep.
and on the euro dollar, that's the one that stopped us out. This wick, it had to make that upper wick, and now it will eventually, hopefully, creep back down. But it was the same premise with the euro yen. The 1 hour candle started. We had a twin tower. First order of business in price action 101, according to Lou, is that when that short candle opens, its first order of business is to make the upper wick. So knowing that, there wasn't a need to really get upset or whatever, panic. Let's go back to the 5. Okay, so now I want to take a couple of calculated trades here. So I'm going to make this a 2-5. All right, just have that set. Now, a lot of times guys make mistakes when they get on a little bit of a run, they immediately bump up that lot size. Oh, excuse me. And I'm not interested in doing that just yet because I need to bump up the lot size with some profit. So I want to take a few smaller trades, build up 20, 30 pips of equity that I can then use to take a larger lot size trade. Did you follow me on that?
Yeah.
You know, if I'm going to take a 20 pip stop with a standard lot, I want it to be 20 pips of their money and keep my 5,000 safe. So that's the thinking. And I think this might have only given us maybe that original take profit. Just looking at where it stopped. What is this euro yen? Let's pull this up here so we could see it. Look at that. Yeah, it just, well, it might not have. Wait, let's see if this is 3 pips below here. Nope. I would not have gotten my take profit. All right. So that time the discretionary exit was the one. And it would have to actually break this low probably to give me my take profit. That's only 1 point something. So let me see here. 3 pips. It's down here. Yeah, it'll do it. Well, I just didn't want to wait. And our goal was in sight, so I took it. Now, oh, here's a good exercise. Now that we have this red candle, how far should this red candle go? How would we think that into the equation? 10 extra brownie points for the guy or girl that can.
Well, you know my answer wouldn't be correct.
Any takers?
You could measure the three or the previous 2 leg downs, and then to see how far that next leg maybe should go.
Excellent. Hit the nail right on the head. Absolutely perfect. And in this case, we're talking about 40 pips. About 40 pips. And we bring this down to about 40 pips. We've got a little bit of room left to the bottom. So that was excellent. So this would roughly be it. All right. And then we could expect a bit of a pullback at this point. This should be about 40-ish. Yeah, about 46. I always round it off. That's 43. And that's 45. All right. Very good, Phil. Very, very good work. Now, the other way you could do this, I don't know if you guys remember the pitchfork projections from last year. Anybody?
I remember seeing them.
Okay.
Yeah, I looked at Andrew's pitchfork stuff years ago. I never really got on with it, but you know.
Okay. Well, I'll draw the projection. What you do is you go from your lowest point in your pullback to the highest point in your pullback, and then you take a line from the center of that and connect it to the swing high, and then you copy that line and you project that down below, and that's where this leg would go, and that's exactly what it did.
Well, that's exactly the same as price projections, Tom, to Mark.
Oh, well, I don't know that. Thank you for telling me that, and this would be the next one.
Well, almost exactly.
Oh, okay. Well, this is kind of based on Andrew's, well, it's based on Andrew's pitchfork, to be honest with you. I just took the piece of it that fit me.
You end up with the same distance.
Yeah. A different way of getting to the same idea.
Yeah.
Then you mark this down here, and you see we're only just a couple of pips off, about 10 pips off, but on a 1-hour chart, that's like government work, you know what I mean?
Yeah. And it seems to me generally those the third price projection is a bit weak because, you know, the trend is petering out.
Sometimes, yeah. And you know, sometimes you'll get that 4th or 5th wave down if the market's really got a lot of drive in it. But let me go back for these projections just to show you, just for the sake of those that might not have saw those lessons. And that's this, and then you project this out here. And as you can see, that wasn't much of a problem. And then you have this, And we put this here, and we project this out there. And that I don't think ever reached its potential. But this marker here, this is what I love about MT4. That center marker is beautiful because that can be a take profit point. Take your profit off halfway. And I see these by eye, so but it's important to just point them out. Now, without doing a pitchfork lesson, let me just touch on the indicator in MetaTrader. Bring this over, and there we are. I haven't used this in a while. Insert, close. Now, if I remember this correctly, this is it 1, 2, 3? There it is. All right, and this is the pitchfork. And again, if you notice how this works out, this is the primary pullback, and this is the extension to the last high, and then we can peel this out and bring this down here, and we're still in that same ballpark. Look at that. All right. And there are a number of different things around Andrew's pitchfork. The bounces off the top here, price straddling the center, closes a close above the center, then a close back below the center. There are a number of different ways to trade this. Maybe we'll get into it in a little bit of depth another time. But I just wanted you to show you the indicator itself on MetaTrader because it does set itself up nicely.
It's interesting how you drew that trend line, you know, top to bottom of a candle, because I knew a guy years ago who only ever drew his trend lines like that.
Oh, really? What, for pullbacks or just trend lines in general?
No, just trend lines in general. He always did a bottom to top. He swore by it. I don't know quite what difference it made, but
If it made money, I'm all for it.
Yeah.
That's
if it works for you, then do it. Yeah.
Yeah, I'm a really, really firm believer in that. That's why when someone says, I got something better, good, show me, because I enjoy the pips. Also, again, on a 1 hour chart, you only had 3 signals, but every one of them, well, 2 signals, but you had one in Asia, one in London on the 1 hour. So if we go down to the 30-minute, again, you had one in Asia, one in London, one setting up for New York, actually, right here. And if we go down to a 15-minute, again, we had the one in Asia. This box kind of clouds it, but I think you can see the top of it. One in Asia, one in London, one in New York. So these things work really well on the higher time frame. Okay, particularly when you get like one of these monster setups that I like. And by a monster setup, what I mean is we're below the 55 and the candle is closed below all 3 moving averages, and we've got a cross on the turbo. All right, same thing here in Asia. We've got a turbo cross. We've closed. Now, we're not quite below the 55 yet, but this is something I would have taken a small chance on. Cut my lot size and give it a shot. Okay, and then this is another, nice setup here. So keep in mind, just because I'm doing it on a 1 minute, it's only because we only have until 10 o'clock. You got me? But this thing works very, very well on the higher time frames.
Yeah, I found the 15 to be really good for this stuff.
Yeah, well, I mean, you tweak it, until you get what you want. Let's just go back and see if there's any other trades here. And then maybe tomorrow. Does anyone have any questions at all about this particular method? About the indicators or the rules? Anything I may have left out? Anything that's not clear? Let me know before I move on, to something else. But most of the stuff that I do is pretty simple like this. You just have to,
I mean, every yellow arrow works, doesn't it? You're going with the
as long as you're going with that 55, yeah.
Yeah, you're ignoring the blue arrows because it's underneath the 55. So every yellow arrow I can see on that chart has worked.
Yep.
So
And again, to go back to, other issues, you've got the 1889 right in here.
Yeah.
And if you follow the 18, remember with the 1889, you can use the 18 as a guide for exit.
Yeah.
You've got the 1889 right here. Okay, and nothing, 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 nothing. Looks like you get a bit of an 1889 here. All right, and then you've got another one here. So all of these methods are very, very simple. They don't require 18,000 indicators. And this turbo, my primary use for the turbo is the divergences. And my MACD, I haven't found anything that gives you a better, well, let me take that back. For onboard indicators, the MACD set at the 534.5 gives you really fast response on the trend change. And that's what I like about that setting. All right, so you see here we went long. Now it didn't have much momentum to it. It's 35 pips for a 1 hour chart isn't, saying a whole lot. But you see here you catch the meat of the long trade, and now you catch the meat of the short trade here. You do get in a little late, obviously, but nothing is going to be that prophetic. Someone's trying to sell me on another indicator. But I did my testing and all that. And again, you see here the 1 hour candle made the upper wick. All right, and we're around halfway through the candle, so this should start chugging short again. Let's go down to a 5 minute. Just want to see if there's another trade in here. Well, again, here's our line we marked. If you remember, we need to get below this because of this arrow. That was our entry price, but we had to get, below there, which we did on a 1 minute chart.
Yep.
And we wrote it down. So in this particular system, if you're going to trade this system, then you have to really pay the price. And the price you pay for this system is in patience, because now we first have to have a blue arrow to go long, and then we have to wait for the counter yellow arrow to take another short. So you may miss an 1889 entry, you may miss something else, but that's the price you pay. It's important to understand that. You follow me? Sometimes when you combine too many things, you end up creating a nightmare because you can't make a decision. And this is tradable on the 1 minute chart, as you can see, relatively easy. Just make sure that you're working with the 1 hour trend, and pay attention to what time it is, so you don't get caught, when that 1 hour candle is starting to make a new wick. All right, and so here again, it's an 1889 entry, but for all intents and purposes, I missed this trade. You got me?
Mm-hmm.
So it is what it is. And let's and notice
Hey, Lou, for tomorrow,
yeah.
I was just asking real quick, like, would you want to trade the funds rate if you obviously have time, or just a regular session tomorrow?
Could you repeat
because, that? I was just wondering, because I think it was last month that we did this. We came back on around 1 o'clock when the rate was going to come out, and then traded, kind of traded the news. Because the markets are going to be pretty locked up, I feel like, tomorrow morning during our session.
Yeah, I believe that. So yeah, maybe we could come back tomorrow afternoon about 1 o'clock, or start the session at 1 o'clock tomorrow afternoon and not do the morning session.
Yeah, it was just a suggestion. I don't know. I was just thinking.
Consensus room. What do you guys think?
That sounds good.
So we'll start at what time is the news tomorrow? Is it 2?
Yeah, sorry, it was 1 o'clock my time. I'm in Chicago. Yeah, it's 2 o'clock New York time is the news.
Okay, so tomorrow we'll start our session at 1 o'clock then. Does that work for everybody?
Yeah, whatever, Lou. Yeah.
Okay, all right, that's good. Yeah, good thinking, Phil. Because we usually make money during the news. Yeah, we usually make money during the news. I just trade it differently than most. I just let the news go, and then we just watch it fall right back in place. You know what I mean? and we're not looking to grab every pip, and I'm not looking to walk into the bar with my chest all puffed out. Hey, I got blah, 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 blah. That's just, there's no money in that. I don't know what this chart was set up for, but we don't need it. Yeah, and I was showing something to somebody. I did a brain fart the other day. I lost $1,000 in my futures account, not switching from demo to live, and I was showing somebody. I like the platform, the multi charts.
Yeah.
But I didn't realize it's quirky how you switch from a live account to a demo. And there are two windows involved. In one window, I went to demo. In the other window, it was still set on live. And the way they show you the profit and loss, you can't actually tell if it's a live or demo account unless you look at the order tracker, which is a separate little window. So I owe myself some money. Because I'll take a trade. Look, this is what happens. Not paying any attention to the outcome because I was just making a point about the lesson and how the buttons worked on the broker and all that. So it's kind of an expensive lesson, but I'll get it back. I'm not concerned about that. It's just that it was one of those things I need to be more careful of on that particular broker, even with all the goodies that they have. Okay, so let's just scan here. We have CAD yen. Let's take a look at that. Oh boy, price trap. I mean, you could see the money everywhere on this chart. We break out of that price trap either way. We got this lone soldier right here that would stop everything. And the yen is considerably stronger than the CAD. So whatever happens on this chart is happening to the first pair. All right, so the CAD is dropping as it should. But we don't have an entry of any kind. Let's go to a 1 minute. And well, we're double yesterday's range, so I'd be a little bit cautious on a short entry until we get like below this level, this 90-20 here. All right, so it would have to get below this level, and then I might take a shot at a short. But other than that, right now. And the other thing too is while this market is still short, the 18 is starting to curve, and our MACD is rising. Even though this is short, MACD is still rising, so it's another type of divergence. And we've blown out yesterday's range. So this thing may want to turn around at some point. And we just closed below that 91. And I don't see any other significant levels here. Nope. It's all open seas until 9,000, I think. Yeah, right here, this guy. It looks like it's a straight drop right to 9,000 because there's nothing in between there. Nope, right here. So this could be a decent supply and demand trade for anyone that's into supply and demand, because this one candle created this entire thrust up. That candle right there. When we hit this, CAD yen.
Oh, I got a frozen screen. All right, hang on.
Okay, yep. Let me know when you're back. Okay, so I just want to make a note.
It says you're off.
It says what?
No, never mind. I was just talking to Mike. He's good now.
Oh, okay, yeah. Oh, yeah, he's got connection problems. But with supply and demand, the violence or the ferocity with which price leaves a level indicates to you how strong the rejection power of that level is. So you see in this one candle ate up more than half of this candle and price never looked back. Very similar to this candle. This candle engulfed these candles and never looked back. Same thing here. More than halfway and it never looked back. So every time price comes down in this level, it should be rejected. And I'll point that out by painting in the levels here. If I take the high and low of this candle, you see how violently we got away from that level. If I take that high and low and draw it out, you'll see when we came back and hit the top of that level, price exploded away. Now I'm going to take this same box and I'm going to put it right here at this high. And look, we came down and right to the tick, price exploded and never came back. All right, those are how supply and demand levels work. Well, I shouldn't even call it supply and demand levels, but I have my own way of looking at that particular phenomena. All right. So having said that, when we look at this 91 level, let me squeeze this in a bit. If I take this and drop this down here, and then grab this and pull it all the way out, and oh, you won't let me do it, huh? And pull it all the way out some more.
You can do that in settings too.
Yeah.
Oh, really?
It's easy to do it in settings, yeah.
In settings.
Well, you double click the box, open it up just like a trend line.
No, explain to me. What do I need to do?
Well, open up rectangle properties.
Right.
Yeah. Just extend the
Go to parameters. And let's see, it's the lower date. You want to just extend the lower date to like make it 11/1.
Oh, I see what you mean. Okay, so 2015.
Just
Got
put
it.
11 here.
11. Okay.
Yeah,
Oh man, I learned something today. I love this. No, I'm telling you, boy, the little tidbits like that. So now, if price comes down in this area, I have every reason to believe that it's going to hit it and get pushed right out, simply because of how violently it left that area before.
yeah.
All right, and remember, that's the key: how violently, how quickly, how decisively it left. And let me go to a clean chart, and I'll show you like a weak level would be well, no, this is a pretty good one here. Now that I want a weak level. Oh, this is a weak level here, this drop. Because you see it took a bunch of candles to really get price to break this middle of this candle. It took like 6 or 7 candles, and then it kind of decided to fall.
Yeah.
But when you look at a real decisive break like this one, there was no question about it. Boom, we're out of here. And then if I draw this level in here, where this low was, you see when we came back into this area, price rejected it. And then it came back again, price rejected it. Then it eventually broke through, and then this became the ceiling. And as you can see here, 3 times it tagged that ceiling.
Yeah.
All right. So that's really the key. This is a weak level here. It did eventually go up, but it was a fairly weak level because it wasn't like one candle got into this area. Like you needed one candle to close up here somewhere like this. See, if one candle had closed up here, now you've got like a powerful, resistance zone or supply and demand zone. Here's a weak level. Okay. Because it wasn't really violent enough. This 2 of these candles should have been 1, and that would have made this a great level. Now you can always mark this for the future because you don't know. And I would mark the high to about the center of the candle and then drag that all the way out also. But we'll get into that.
What time frame do you normally do that on, Lou?
Excuse me?
What time frame do you normally do that on?
I prefer the 1 hour and 4 hour.
Yeah.
And I find the 4 hour a bit more compelling only because if I put volume on the chart, and let me do that. Why do I have this up here? I'll just put volume. I'll just put volume on. Volumes. Okay, so if you look at the volume, okay, on down here, let me go to something so I can make it a bit clearer. This is, are you okay back there?
Not me.
I know somebody was having a rough go at it. Um, this is a strong rejection level right here. This one candle engulfed all of these and price took off, and then look what happened every time we got back up in this zone. Every time we got back up in that zone, rejection, rejection, rejection. Okay, if you look at the volumes, you'll notice that on the 4-hour chart, you get a break and then you get an increase. You get a break, and by that I mean you get very low volume and then hyper volume. And I'll put a line across this. Okay, so you'll notice that you have 3 hours of really high volume right here, followed by 3 hours of relatively low volume, followed by 3 hours of relatively high volume. So on the 4-hour chart, when you get these particular areas, these really strong rejection zones, it's easy to come back and you can pretty much spot the 4-hour candle that's going to take off with it. All right, so you see this is a very strong zone here. This really took out this candle. This one should have been the one that did it, but it didn't. And here we have our uh, twin tower. And again, if I mark the high of this candle in like the middle of that wick, you see when we came down here, it rejected it. I wouldn't be the least bit surprised to see this rejected again out here.
Yeah.
All right. And I only have to look at the chart 3 times a day. And usually what will happen is it will come after one of these low breaks. Like you see, this came, you see there's no volume right there
Yeah.
on this white candle. And then all of a sudden the volume comes into the market and boom. All right. And then more volume. Now here, there may have been a lot more trades in here. And let me explain that too about the volume. People kind of think that it's, um, okay. With this low volume, you had an enormous amount of selling pressure, enormous. Yet the volume here was higher, but we had a smaller candle. Now, why is that? Because when you see what the eventual outcome was, what's going on in here, people here were absolutely selling. People here were looking to get their take profits, and yet more people were thinking of selling. So you may have had a lot more transactions that were closer to break even. So let's say you had 5,000 transactions in this one candle. Here, volume is higher. You may have had 10,000 transactions, but the bulk of them, if you played one against the other, was actually break even. Do you follow me on that?
Yeah.
All right. And then we finally broke the mold here. So now it's a little bit lower volume. There are less people involved, but the direction is clearer now because the heavier hitters have taken over the direction of the market. All right. So you need less players. You only need 300 or 400 big mega players to push this now. Where here you may have needed, 5,000 players to drive it down. So keep that in mind, how volume is not necessarily an indication of how far something is going to go. It's just the amount of activity in that particular time frame. All right. So as I said, with the volumes, and you have these levels here, if you see that you're approaching a level and you're coming out of one of these little low 3 spots or 4 spots,
Mm-hmm.
and it's crystal clear to see it here, 3 high ones, 3 low ones, 3 high ones, 3 low ones. That can give you a good indication to start looking for an entry here or start looking to place an order in here somewhere. All right. So that my definition of volumes. Now you'll get 100 others, but when I look at what happens with the candles and look at how prices turn around and when they turn around, I'm beginning to realize that it's not so much that it's going to go in any one direction as it is how much activity is involved at that point.
Would you say that a high volume might be setting up a change in direction?
Absolutely.
Yeah.
Absolutely. Especially high volume after a significant and decisive drop like that. You know what I'm saying? They didn't need as much volume to make this fall. But to make the turnaround, they needed a dollar volume because someone had to buy 10,000, sell 12, buy 14, sell 18. And all that, when that imbalance finally shifts, that's when you get this thrust up right here. So didn't mean to get off on that, but it's just something I wanted to touch on.
Have we done a lesson on S&D or not, Lou? I've forgotten.
No, I touched on it 3 or 4 times.
Touched on it briefly before, but I didn't know if I've missed a lesson or something.
Yeah, no, maybe I'll do that Thursday and Friday. You know, or do a maybe I'll do it Friday. This way you can look at charts over the weekend and mark them up or whatever. I'll start a series on rejection levels. And I'm going to call them rejection levels because there's a guy, Sam Seiden, who has coined or I think copyrighted or patented the term supply and demand, like he was the only one in the world that ever saw it or whatever. And he may have been, I guess, the first person to use those terms, but
yeah,
I've always called them rejection levels.
Yeah.
And because I can't see what's going on. He claims he sat at the desk and he had the papers in his hand with the orders, and he could tell by how the market behaved after he had his orders passed through his hands.
He's never traded a thing in his life.
I don't know. I did end up with several of his students, though. Not by going out trying to steal them, but they heard of me, and then I said, well, show me what they taught you. And it was like, whoa, you paid 25 G's for that? and still never got the whole package. That's okay. I don't want to get started. Yeah.
But didn't it say university too? So there you go.
Yeah. So anyway, I was a bit surprised, and I have one very, very good friend who he invited me to one of their free seminars. And it was a sales pitch kind of thing. And then a couple of people raised their hands in the seminar and they started complaining, look, I spent the 10 grand and now I spent, the 15 grand. I still can't make any money. This thing doesn't work. And then someone else raised their hand and it was the same excuse. And the way they got around it was that, well, listen, once you pay for it, you can always come back and take it again.
Yeah. Steve Morrow.
Oh, please don't even. Oh. I've had some of his people up in my office when I was teaching at Beam FX, and yeah, he was another guy who would never take a single trade in front of anybody.
Yeah.
He was a good marketer though, very slick. He'd have this book maybe 3 inches thick, and I have all my live trades right here. Here's a whole book of live trades, and he'd pass it around the room. I say, hey, I'm thinking, well, at least the guy is open. So I never had a chance to look at the book. I'd see people flip through a couple of pages. They'd stop on one page and pass it on. So it was a sales pitch. I wasn't buying, the sizzle or the steak. Then another friend of mine, a person who became my friend, said, listen, I'm thinking about this, this thing I saw. It's 5 grand, blah, blah, blah. And so I said, okay, I'll go along with you. And I never even bothered to ask him who it was. Walked in the room with Steve fucking Morrow again. So this time I grabbed the book and looked at it. And I looked at it carefully, and it was a bunch of different statements from different brokers, and almost none of them were more than a week long. You get what I'm saying?
Yeah.
So there'd be like 14 pages of one day when they had 2 good trades. Then there'll be a few pages of like, this guy had a good week. And then it's a different broker, a different printout, and this guy maybe had like a good 4 days, and this guy had a good month. But you couldn't get 90 days of anything from them. And, he wouldn't trade live in front of people, which was his prerogative. I know a few guys that sell stuff that won't trade in front of you. Yeah, God bless him. He only needed to sell 250 of those to make $1 million, so I could see where it wasn't in his interest to trade when he could just get 250 customers, and then get them for the $100 a month or $200 a month, whatever it was. So the people have given me all the tapes, all the stuff. I wrote a treatment, I'll call it, on it because I thought maybe if this thing was tweaked a little bit, people could make money, but there was no way to really tweak it with the way he was teaching it. You'd have to kind of redo the whole thing, but keep the basics, of the market turning around when it makes an M or a W, which, with did nothing but one, two, threes, but he called them M's and W's, and he had cute nicknames for things.
Well, Kim Crumpus was one of his trainers for a couple of years.
Yes, indeed, and she's no longer there.
No, she left on her own at the same time as a friend of mine, Ray, was. In fact, I just saw him in Las Vegas last month. He lives there. He was also a trainer for a bit, but she has taken one section of it and totally just kind of isolated everything, and that's all she trades.
Yeah.
And she may take 12 trades a day, 8 trades a day, and most of them will be losers, but there's only 8 or 12 pip stops, and her winners are usually going to be 30 to 40. Those are live trades.
Yeah, nothing wrong. I can go with that with the tight stops because and I've said that many, many times. I prefer tight stops.
Yeah.
And I'll never move a stop back. And as you can see, in fact, this morning when I had the one stop was tight, and I said, boy, based on a 1 hour chart, this thing will probably stop out, then turn around and go in our direction. Sure enough, it stopped out, turned around, went in our direction. But rather than be upset at that, I simply took another trade and got the money back. You follow me?
Yeah.
So, okay, you got me that time, but I'll get you next time. And that's exactly what happened. So, let's pick a different pair. Let's go pound Aussie and look at these. Okay, this is a so-so rejection level here, and it got tested here. Let me take these volume. Oh, again, with the volumes, you see you have 3 or 4 high spikes, and the rest of them are low spikes. But with the pound Aussie, even the low spikes have sometimes some movement in them because the pound Aussie is very volatile. But let's just take these off. Volumes. This is a good level here that we haven't come back to, but should it ever come back? Now, there are a couple of different ways of marking it. Some people like to mark the whole candle. I prefer to give this area where the top of the wick to this high, and sometimes I like to take a little bit of this prior candle also. And that's just my own preference. So that would be a level there for me. This is a good level here, but prices haven't been back here. I would take this whole candle here. And we've got one here where you see this candle body is more than 50% into that candle body. And that was a good rejection level, but sure enough, we left, came right back and almost right to the tick, came out and took off. So if price gets down to this area again, I wouldn't be surprised to see a bit of a rejection. This is a slow, this is good. This is a slow rejection area. Yeah, even though we had a significant distance that it dropped, it took a while for it to kind of crawl and finally make up its mind. You know what I'm saying? While this one was much stronger.
Yeah, that's the better one, yeah.
All right. So now if I draw across this one, you'll see that every time we've come back up in that box, it got rejected here, 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 here. Okay, in that area. And I usually grab a little bit of this black candle, but I'll leave it for the way it is. But I do want you to see that. Every time we got near this area, it was reject, reject, reject. And the theory is that there's still some orders there, or there's someone protecting the level. It could be any number of things, and everyone's got their own theory. Here's another good one here after this bit of consolidation. And if I draw that out, I take this candle, which is my style. And you see when we got to that level, right to the tick. It was like, boop, nope, we're off.
On that level, Lou, you could almost argue that the candle following the big long drop went back up and hit that level too before it continued its run.
Well, yeah, based on how I drew the candle, but now just to be correct, if I only take now I'm taking this candle is actually what I'm doing, this white candle.
Yeah.
You got me? So you could say that. All right. However, when price did come back to that level, we did get a rejection. All right. So there's a tiny bit of subjectivity in drawing these levels, but um, nothing that can't be dealt with effectively.
This is similar to something I was talking with Daryl about a while before that I was reading, where a guy marks up the charts like you've just done there, and then talks about a little bit of space above and below it. How much space means pips. How many pips above and how many, set your pending order somewhere in there.
Yeah. Oh, absolutely. Yes.
Yeah.
Yes.
Yeah.
And that's what it's for. You just take the bottom of this box and you say, here's my pending order. Now, let me just think of something here. All right. This is this is our projected move down. All right, it was 500 pips. Now price is coming back into that area. And I'll talk a little bit about the money management. There are 1,000 ways of doing it, but here's one way that makes a bit of sense. First, you measure your risk because that's the only part you can control. So if this is my box and it's based on the width of this black candle here, I could creep it up a couple of pips, but I'll leave it. This box is 70 pips wide. Yep. One method is to make your risk double the box, okay? Only if double the box is less than this original move down. Did you catch that?
Yeah.
Yeah. So if double the box, so now here we have this thrust down right now. So now price is dancing around. All right. So now the last time, so now if I take this trade, and let's say I put a pending order right at the bottom of this box, and my stop is going to be twice the box. That's 50. Let's say my stop is going to be 100 pips. Okay. This push down had to be a minimum 100 pips, or the trade's not worth it. All right. And the idea being that when you get half of your risk, you're going to split your trade, move your stop to break even, and manage it at that point. Yeah. That would be the idea. So in this case, this thrust up into this area. Now this would have been a losing trade, but let's assume this is 400 pips. Our risk is 120 pips. Our risk is up here, 120 pips. So what we're going to do is at 120 pips, take some off. And we didn't quite get there, but you see what I mean? You know, when you get halfway, when you equal 1 times your risk, you want to split the trade and do some trade management.
Yeah.
But if you come back and see you're up 100 pips, I mean, most of the time people will either slide the stop loss up or do something to kind of protect the trade. And like anything else, nothing's going to be 100%, but you get the premise.
Yeah. So this is as much about trading extremes as it is about actual supply and demand, isn't it?
Yes, it is.
Yeah.
But he patented the thing, so I don't want to use it blatantly.
Yeah.
All right. And I may call it that, trading market extremes. That's got a better take. It's more realistic because I can't prove supply and demand, but I can see the extremes. All right, so it's 10 o'clock. Tomorrow we'll start our session at 1 o'clock. All right, same place, and we'll see what we can do after the news or during the news.
Yeah.
All right, gents. Have a good one, and I'll talk to you guys later.
Yeah, thanks, Luke. Great lesson. Thanks.
Okay.
All right, thanks, Luke.
Be well. Bye-bye.